Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at a stock that I think has a lot of opportunity moving forward, especially with the whole EV, green energy craze that's going on right now. This is going to put us in a position to take advantage of a sector that very closely correlates with a lot of the stocks we already invest into. So let's not waste any time. Let's jump right in. Alright guys, so first things first, this video is for entertainment purposes only. I am obviously not a licensed stockbroker. You should always do your own research, do your own due diligence, don't just take my word for it. I try to bring you the best possible information that I can, but always fact check me. Before we jump in, subscribe to the channel, hit the bell notification so you can stay up to date. I post new videos every day with growth stocks, penny stocks, anything that I think will do well and I think people should be looking at. There's also a link down in the description of my Patreon account. Come join me over there. Be a part of the family. I actually got my first two last couple of days, so thank you, Caden, Jonathan, if you're watching this. Much love. I'm doing the first 100 patrons for just $1. You'll get access to the private Discord where we talk stocks. You'll also get links to all three of my different portfolios that I've got over there. I've got a high growth with 46 stocks, really high growth with like 20 stocks, and then a penny stock portfolio as well that I've been adding to consistently. So that's nice. You can see what I invest into. And then anytime I buy or sell a stock, I send out a notification so you can see it in real time. And then any watch list or any stocks that I see that are, looking really nice for an entry, anytime I take a swing trade or anything like that. Then also take advantage of the Webull link, set up an account, deposit some money. You'll get a couple free stocks, and then I get a free stock as well, so it helps support the channel. I actually had a guy tell me my intros were way too long yesterday, so let's not waste any time. Let's jump in. So the stock we're going to take a look at today is MP Materials. Really cool company. They are a rare earth mining company. This is their website. You can go check it out. This is kind of on their About Us page. Our mission is to restore the full rare earth supply chain to the United States of America. MP Material owns and operates Mountain Pass, the only integrated rare earth mining and processing site in North America. Our success will drive the onshoring of jobs, national security, and a carbon-reduced future. So with that being said, let's kind of take a look at some of the numbers. I'll kind of go over some of the reasons why I like them and some of the concerns that I have. So like I said, MP Materials is a rare earth mining company. They're actually the only rare earth mining and processing site of scale in the Western Hemisphere. They currently produce about 15% of the global rare earth content, which is a huge percentage. The company is currently valued at $7.5 billion as of today. Their revenue was $67.4 million in 2018, $73.4 million in 2019, but in their trailing 12 months, they've jumped that up to $113.2 million, which is a nice increase. Their gross profit was $10.1 million in 2018, $10.3 million in 2019, so not a lot of growth there. But in their trailing 12 months, they jumped it all the way up to 49 million. Yeah, 49.3 million, which is really nice. Their gross profit in their trailing 12 months has actually grown 43.5%, where the sector median, let me rephrase that. Their gross profit in their trailing 12 months is 43.5%. It hasn't grown 43.5%. It is 43.5%. The sector median is actually only 28%. So they've got a pretty nice, gap there between the sector median gross profit and their gross profit. Their fundamentals are increasing and looking better over time. They weren't super amazing the last little while, last couple of years, but they're getting better. Their operating income was actually negative $8.9 million in 2018. It was negative $7.6 million in 2019, but they've jumped that up to positive $25.8 million in their trailing 12 months, which is really nice when you're looking at operating income. In their Q3 of 2020, when they reported earnings, their revenue grew by 52% year over year to $41 million. Their net income grew by 4.2 times year over year to $14.6 million. And then their adjusted EBITDA grew 159% year over year to 11 million. So like I said, their fundamentals are getting better. The main thing that this company is focusing on is the NdPr, which is the type of rare earth metals that they mine. And that material, the NdPr, is key to a lot of like the high growth industries that we invest into. So like a lot of the EVs, the green energy, the solar companies, a lot of them. The separated rare earth elements that they mine are like crucial to the magnets that literally power the EVs. Drones, which we own ALPP, which acquires those two drone companies, so that's important. Defense systems, Palantir, they're more of the technology side of it, but they're in some of the defense industries. Wind turbines, robotics, and a lot of the other tech high growth industries. The EV industry actually is consuming about 5% of the NdPr in the world. And in 9 years, they are expected to increase that by 9 times. And so that's a catalyst right there. Like I said, we are already investing in these green, EV companies. And so if you've got, EV consuming 5% and they, almost 10x it in 9 years, that's big jump. That's going to obviously be nice for a company like this. Typically, when you do think of like a rare earth, a mining company of any sort, you're going to think of a lot of pollution. Where these guys are more of a green, well, they try to be a green, mining company. California has definitely the most, strict, environmental standards out of pretty much any state in the U.S., but MP actually meets those standards, which is great. They do a lot of stuff, like they try to like recycle their water, they try to recycle a lot of their materials, so that's a plus for me. The stock price has been absolutely going insane the last few months, and I think why, there's a couple of reasons. So MP Materials is one of the only non-Chinese options. It's not the only, there is other ones out there, but it's one of the only or very few non-Chinese options that's got, I think, this big of a market share or produce this much. China currently produces like 80 to 90% of all of the rare earth metals. And MP Materials still has to send a lot of its stuff out to China, I think, to extract. But MP did say that they are on their way to becoming fully independent from China, which is great. Once they do that, that'll be huge, for MP Materials. China's actually been kind of throwing around the idea, or kind of making almost kind of statements, that they're going to limit their rare earth exports, which if they do that, that is going to be huge for these guys, but it's going to be not so huge for like Neo and XPeng and a lot of the other companies that we invest in. I don't know if you guys were watching Neo and XPeng yesterday, but they came out and Neo said that they had a concern about their chipsets in Q3. Q1 was fine, Q2 was fine, but Q3 they were worried that there was going to be a shortage, and about the the big semiconductor shortage that's going on. And so when they said that, I mean, their stock tumbled like 13% yesterday. XPeng sold off like 10%, which is huge. I think it was a little bit of an overreaction, just because they said they could face issues, or it could be a concern. And so you can see right there how much news affects those types of stocks. When we're investing in these big high growth stocks, these EV stocks, any bit of news like that can affect things, tremendously. So if China comes out and they're like, we're limiting, rare earth exports, that could really make this company pop. If they can become independent, but it will make, a lot of the other plays, tumble. So that's why I like to position myself in, a lot of the really hot sectors. But if I can get into sectors that are, right outside of it, like AMD or a lot of the, the semiconductor plays, great. It's really, really great to be diversified like that. So Morgan Stanley put a price target on this stock of $57, which isn't, super high above where we're at right now. It is still like 17, 16%, 15%, something like that. but they did say a couple of things that I didn't really agree with. So they said something like MP Materials was not just like a story stock or something like that. It's also a company with a strong balance sheet and positive cash from operations, which, you know, if I'm going to talk about all the great things of the stock, I'm also going to talk about, you know, some of my concerns with the stock. When they said strong balance sheet, I mean, yeah, MP Materials has an improving balance sheet, but they really only had like $30 million in cash on its balance and $54 million in long-term debt, which that, you know, 54 million is not a lot for a company that's valued at, you know, 75 billion or 7.5 billion, but there's just not a lot of cash there. You know, 30 million in cash is not a lot for that big of a company. So I really wouldn't call that a strong balance sheet. I would say it's an improving balance sheet. The other thing is, the other thing is positive cash from operations. I mean, MP, they do have positive cash, but you know, I was looking on Seeking Alpha, that's where I get a lot of data from, and its cash from operations was only 1.7 million, and that's really not a lot, especially when you start looking at like their capital spending. Their capital spending was 9.6 million and growing over the past year, so it gets eaten up a ton. You know, when you're looking at that type of capital spending, when you're trying to grow and do things like that. So it actually has put them in a spot where they're negative on their free cash flow, which again, I want to say that they also have, they've got a net, a negative net income of like 45 million over the past year. So a positive balance sheet is a strong balance sheet is a I don't know. I feel like it's a little misleading, especially coming from someone like Morgan Stanley. And then to say positive cash from operations, in my opinion, is also a little bit misleading. So that doesn't in any means mean that I'm like bearish on this stock. I think this stock has a lot of opportunity. I think it'll blow right past that price target of $57 over the course of the next 12, 24 months. And I'm still going to invest in it. I don't currently own it today, but I am going to create a position in you know, today or sometime in the next day or two when I find a really good entry. So I just wanted to tell you the stuff that I like and the stuff that I don't like. You know, I'm not just going to sit here and talk about all the beautiful things about the stock and not tell you some of the concerns I have. Their financials are not that amazing. They do look really nice in the sense of they are improving. And I do think they will continue to improve that. They've got, you know, earnings coming up on like March 18th, so we'll see how that goes. If they do, you know, obviously have positive earnings, it's going to bump the stock. But at the end of the day, I think that there is also, you know, a little bit of negative here that could, impact how the stock performance goes. Anytime you invest into a company like this, there's obviously, you know, risk and reward, right? Obviously, there's going to be, you know, positive and negative catalysts, just like anything, you know, or any stock you invest into. So, you know, the stock really is super extended right now. So that's why I like to bring stuff like that up. If you look here, back in November, I mean, the stock was trading at like $10. Then it just has had this massive growth all the way up here to, you know, just under $50. It is even, you know, selling off a little bit today. Not a lot, but it is selling off a little bit. Like I said, to get back up to, you know, previous, or that $57 price target that Morgan Stanley put on it, you're looking at 20% upside. So that's still a really nice upside. I am creating a position in the stock once I see it probably get down to this this gap right here at around 47. That's where I feel comfortable entering, or, you know, down here around 45, but we'll see how it goes. But that's it for today. You know, if you have any questions, put them down in the comments. Also, if there's any stocks that you want me to cover, you know, put down in the comments as well, and I'll try to cover those. Remember to like the video. That helps me out a ton on the YouTube algorithm. And then also, you know, come join me at the Patreon. I'd love to have you. But that's it for today, guys. I'll see you guys in the next one. Peace.